I think you all download from the LMS, no? I have already uploaded to the LMS, all three. Okay. Okay. Now the today's topic is the corporate governance. I think you all might be familiar with corporate governance aspects. What might be the importance of corporate governance? Yes, both private and public sector organizations, they might be keen about this. Specifically in countries like Sri Lanka as developing economies, now we are going to like a major talkative topic in corporate governance arena. What might be the like importance of this in today's context, present context? Why this term came to play as a developing country like Sri Lanka? Any idea? Yes? Have you seen the disclosures in annual reports? Yes. Now most of the under the listed as a listed company, there is a mandatory requirement for them to disclose about this corporate governance. As you all can see, there is a I have given a URL as well in the LMS. This is the corporate governance report. This is the best report which has been awarded by 2014-15 the People's Leasing Company. The award gained from the Chartered Institute of Sri Lanka. So this is the best corporate governance report in year 2014-15 period. Therefore, there is an importance of this corporate governance in today's context because there is a vital importance because they have to disclose regarding what they are doing. So this is governance structure or the governance framework. Therefore, there is a mandatory requirement as listed companies. They want to like disseminate the information under this how the company govern. Okay, we'll go back to this later. Yes. Yes, have you all heard about the Enron and WorldCom cases? What has happened to those global companies? Enron, WorldCom, those are the globalized company or the global companies. But they have had the corporate collapses. The corporate collapses have had due to the fact that the mismanagement of the companies. Specifically in recent example in Sri Lanka also, have you all noticed the Pramukha Bank? What has happened? And Central Bank? So what has happened? The corporate collapses or due to like mismanagement of the businesses, they might be go into bankrupt position at the end. So these things are happen because these are the situations like why this might be becoming mandatory requirement for today's arena or the today's context. Therefore, there is an essential requirement for the listed companies. They have to disclose as their report as a corporate governance. So now today what we are going to do, we are going to see what they are disclosing like mainly what they are going to disclose under this corporate governance report and what might be the important aspects of this. And also other than that I have uploaded, there is a particular guideline given under Securities and Exchange Commission in year 2013, collaborated with the Chartered Institute, they have prepared a manual. Okay, Securities and Exchange Commission as well as the collaborative with the Chartered Institute of Sri Lanka, they have prepared a manual or the guidelines under this how they have to govern as a company, how they have to govern. So corporate ruling, what kind of rules that they have to abide by as a listed company. For an example, how the board should be comprised with the executive directors, the non-executive directors, whether they are independent. So what is the role of the chairman, what is the role of the CEO. So likewise those rules are applied or those rules are included in this Securities and Exchange Commission document. That is the corporate governance framework which is applicable for the Sri Lankan companies. Yes, other than that, as I mentioned, the importance, like annual report, there is a requirement to transparent the information. Other than that, due to the mismanagement of the companies, therefore it might become a mandatory requirement them to be transparent about that governance framework. Okay? Any more? What you all know? Have you heard about this principal-agent relationship? Yes, no? So the principal-agent relationship also becoming a part to emerge in the corporate governance principle. So we will discuss one by one. So that might be the requirement or the importance of the disclosing about these corporate governance aspects in our annual reports. Other than that, the mismanagement of companies, as we discussed, Pramukha Bank, the corporate collapses, the central bank, those have happened. And also one of the leading textile industries, textile firm, the collapses have happened due to this, the mismanagement of the businesses. So therefore, there might be vital importance of this, learning about and knowing about this, the corporate governance requirements. Understood? Okay, that might be the outer thing. So what do you mean by this corporate governance? As you all heard? Yes? General understanding? Yes? Corporate governance? What kind of things? How do we define? Whether there is any particular definition for the corporate governance? Since it is a mandatory requirement, there should be, no? Yes? Any idea? Yes, when it's come to the corporate governance, as I mentioned, there is a compliance requirement. Compliance in the sense, as I mentioned, the Securities and Exchange Commission, the framework they have given, the board should be comprised like this, and CEO and chairman should be separated. Understood? Therefore, there are governing rules. Yes, there are governing rules behind this. Therefore, the governance, when it's come to the corporate governance term, there are mainly, we have to think about the compliance aspect. That means the companies are adopting these given rules or the guidelines. Got the point? Other than that, the companies need to think about the performance. Or else in today's we are talking about the sustainability, the environmental sustainability. Last week also we discussed about that, because that much of importance is their performance aspect. Not merely the in number terms like revenue generation. Other than that, the companies need to think about CSR aspects, corporate social responsibility, and also the environmental sustainability. Therefore, when it comes to the corporate governance term, we have to abide by these two aspects. But the point, the one is compliance requirements, and the other point of time, we have to think on the performance. Understood? Okay, that is the basis. How do we define these corporate governance? With that idea, shall we move into the definition? The corporate governance describes the overall guidance of organization and focuses on both achieving the performance while ensuring compliance with obligations. Therefore, as I mentioned, as a corporate governance principles, we have to think on these both aspects, not merely the compliance, not merely the how to structure the board, how many number of independent directors should be there in the board. That is one aspect. Understood? Other than that, we have to think on that, how to gain the performance of the company while adhering to these rules or the regulations or the compliances. How do we do or how do we go performance aspects as well? Understood? Okay, so those are the main aspects we are talking under this, the corporate governance principle. I have given one example also. This is also one of the best annual report which has been gained out of 2014-15 year under JKH. How they have defined their corporate governance. The group's corporate governance philosophy is institutionalized at all levels through a strong set of corporate values, a written code of conduct, and a proven performance management and value monitoring system. So can you gain something out of the definition? Yes? In this example also they have highlighted about what we discussed, the both aspects. Got the point? One way they are telling that yes, we have to abide by with the written code of conduct. That means what? Yes? The compliance requirements. I told you the Securities and Exchange Commission, there is a written report. As I uploaded in the LMS, there is a written report. So these included in the compliance requirements. So therefore at JKH what they are highlighting under the corporate governance, they abide by with the code of conduct. That means the compliance requirement or the good behavior, how to run the business in a good manner while like ensuring these compliance requirements. Other than that, they are mentioning and proven performance management. Therefore, they are highlighting about the performance aspects as well. So these are recent practical examples you all can identify. Therefore, there is a vital importance of this corporate governance in today's arena. Understood? Okay. Yes, the last point is telling like effective governance is very important. As you all know, now we are going under good governance, no? Yes. So therefore, if the poor governance is going, what might be happen? There might be chances or the potentials to happen the financial disasters. Here, the effective governance is very important, and poor governance has often led to financial disasters for individual companies and even whole economies in the past. As you have seen what has happened to the Pramukha Bank at that era, what has happened? Whole banking panic were there at that situation. All the bankers were thinking about how to survive it, because they might be having some kind of a discredit or disreputation once this Pramukha Bank has collapsed. Can you all remember? Therefore, the banking panic has emerged. Therefore, they tend to think about how to mitigate these issues. Thereby, they try their best to adapt the corporate governance rulings. So if they want to go good governance, okay, if they want to go as good governance, then only the companies can be go for the survival. Otherwise, what will happen? The customers might not be having good trust. Trustworthiness might be violating among the organizations. Understood? That is what is highlighting. The effective governance is very important. Otherwise, what will happen? It might be lead to the financial disasters. That's why I told you one of the leading textile firm. Can you have an experience with that, no? The Odell. It is also happened like mismanagement, no? So same thing has happened. Ultimately, what they have to do is they have to go for the bankruptcy position. So it is like that. Therefore, effective governance for a company is a very much important aspect. Yes, now we are going to talk about, I told you, the principal-agent relationship. You all know that, I think, but there might be more to add in the corporate governance aspect regarding this principal-agent relationship. What do you mean by this principal-agent relationship? What might be the base for that? Yes? When it's come to the company, you all know there are stakeholders or the shareholders are there. What do you mean by this principal-agent relationship? Any idea? Have you heard about? Yes. Then? Yeah, there should be a split between the management and interest between the management and the shareholders. Partly correct. But there might be more. Yes, any idea? Yes, when it's come to this, like for an example, assuming in a personal manner you might be wealthy and you might be having like you might be millionaire or something, you might be having like a luxury vehicle. So in that case, assuming that you might not be able to do driving, and also with the busy schedules, you might be not able to even drive to the office from the home. So in that situation, what will you do? You might be get something driver, no? Then assigning all the custodian about the vehicle to the driver. Okay? Then in that case, who is the principal? Who is the agent? I will give my vehicle, the whole custodian property to the driver, but he has to abide by the best interest of mine, no? That is what we call the principal agent. Who is the agent? Who is the principal then? In simple terms, not going on in depth of the principal agent relationship. Yeah, very good. That means the driver is the agent, the owner of the vehicle is the principal. Something like that. That is the main base. It is something like this principal agent relationship. What you can say is like as shareholders, we might be having the ownership of the companies. Okay, as shareholders of the particular, you know shareholders, no? So as shareholders, then we might be have the ownership towards the organizations or the companies. Then what we are doing? Are we engaged, assuming me as a shareholder in ABC company? So I am going to do the managing of the particular business. No, I don't know. I might not be going for the managing of the business. Therefore, I am giving my custody or my right or my investment capacity to some other person to govern this or to take care of this. No, I am investing money or the capital, maybe the assets, but I am asking, please be take care of this on behalf of myself. Understood? It is something like that, the principal and agent relationship. Therefore, what the companies have to do, the board of directors, we call the board of directors have the responsibility towards the shareholders, custodian or the capital or the investments. Understood what I am telling? Therefore, the principal agent relationship is based in that. Here you all can see the need for governance arises when an individual, group or entity assumes responsibility to look after the rights or the interest of other individuals or groups or entities. Like what we discussed, I am the owner of the vehicle, but I am passing the custodian or the ownership to the driver. So I think that driver will be take care of my vehicle and maintain the safety and everything on behalf of me. Understood? Something like that. Here also mentioning that those assuming, here what we are doing, we assuming such responsibilities, that means though the personnel who that assuming such responsibilities, we call them as agent. Understood? The person who assuming or taking such responsibilities on behalf of the other party, we call them as agents. Okay? Those whose rights or interests are being looked after are the principals. The owner of the vehicle might be maintained because I am having the right. I am having the ownership for the vehicle. Then that is the person who called as principal. Understood? So therefore, person who is getting the responsibility on behalf of the other party, we call as agents. Okay? And the other way around, the person who getting the right or the ownership, we call as the principal. So that is the base whom we called as agents and the principals. That is the base or the foundation. Got the point? Okay. Yes, can you all refer to this? This is also some examples given. When it's come to the companies, now we move into the personal life to the company's point of view. When it's come to the company, you all know who might be the principal? The shareholders, as I mentioned. Okay? But on behalf of shareholders, because shareholders are the individuals who might not be involved in the day-to-day running of the businesses. Okay? Shareholders are the individuals, they are not involved with the day-to-day running of the businesses. But when it's come to the directors, the board of directors, they are the agent. That means they have right or they have obligation or the responsibility, the betterment of the shareholders, they have to govern the businesses. Understood? So those are called as the directors or the board of directors. You all know in the government case also same, no? If the government, the parliamentarians are or the politicians are represent whom? They are represent general public, no? Although they are not doing so, but actually this whatever should be, they are representing us. Therefore, they are the agent, but as a general public we call as the principal, because we are the one who voting, no? So we have the right to appoint this person or that person. So we called as the principal, and the elected representative we can call as the agent. Understood? Okay, that might be the base or the surrounding about this principal and agent relationship. Yes, when it's come to this, other than the overview, yes, corporate governance, what we mentioned or the stated as a definition, corporate governance is the system by which business companies are directed and controlled. That means under the corporate governance principles, we might be mentioned that how to direct the business or else how to control the business activities. That is what we are highlighting. As I mentioned, you all have to be abide by with the SEC regulation framework. So that is the way that they have to control their activities or directed their business organizational activities. So that is how the direction, in the sense what? You all know? Yes? Last week we learned about the direction. Under the introduction part? Yes? I told you when it's come to the strategic management, we might be always talk about the long-term future, not in short-term perspective. Therefore, the direction, in the sense where the company wants to go and what business are we in now. The vision, mission, goals, objectives, everything might be coming under this, the direction. Okay. Then the control. The controlling is we have to have govern under certain rules and regulations. Okay, as a company, as an organization, they have to be governed under particular framework, rules and regulations. Maybe at the Securities and Exchange Commission, maybe at the central bank regulation, etc. Understood? So in that case, the controlling is that you all know the companies, as you all know, companies are involved with the different parties, those who are contribute capital, the expertise, as well as the labor. What do you mean by capital? The shareholders are the people who are providing capital to the business, or maybe the investors. Then when it's come to the expertise, who are the expertise? Sometimes there might be good R&D facilities, research and development workers, or else we can say the suppliers. They are the one who go into support in this whole process. The labor, in the sense we can say what? The human capital. Therefore, success of an organization might be determining with all these aspects. Investors in one hand, and the expertise, the human capital, the physical capital. Understood? So that is what how organization or the company is comprised with. So when it's come to therefore corporate governance, what they are mainly focused towards, the business corporations should be systematically directed and controlled. Understood? The direction might be highlighting where they are going to be, what their existing businesses are, vision, mission, goals, objectives, etc. When it's come to the controlling, they have to be abide by, or they have to be ensure that certain compliance or the ruling. As I mentioned, central bank, maybe central bank or Securities and Exchange Commission governing rules, etc. So those might be important for them to have a good governance or good future. So therefore, the corporate governance, how do we define? The companies need to have the proper direction as well as the proper controlling mechanisms. So this is some of the research finding about the corporate governance. It is also same thing they have mentioned. I am not going to repeat the same thing. The companies need to having a direction, control and monitor. This is a recent 2006, Professor Disa Bandara, one of the previous directors of the Securities and Exchange Commission. He has done a research in respect of this corporate governance. Okay. He has identified how to define the corporate governance. I just put an extraction out of this to make sure to get a good proper understanding about how does it going as a practice. Yes. Yes, therefore what might be the importance towards the strategic management then? We are learning about the strategic management now? Yes, corporate governance is a general thing. So what might be importance of the corporate governance in the strategic management purview? The perspective? As strategic managers also we are dealing with the day-to-day businesses or the day-to-day operations of the organizations. Maybe we are at the corporate level, maybe we are at the middle level or else lower level. Therefore, what do you mean by this strategic management perspective? We can say this relationship among board of directors, the top management and shareholders in determining the direction and performance of the companies. In the strategic management perspective, we are looking at how do we maintain this relationship among the board of directors and the top management as well as the shareholders. How do they govern, how do they direct the businesses into go in line with this controlling mechanism as well as how do they achieve their objectives. That is what we mentioned, the direction and the controlling. Yes, when it's come to the, as it mentioned, the board of directors, we'll discuss in later part, I think it might be mentioned. Yes, these are the three parties as we discussed, because in the strategic management perspective, we might be ensure how do they maintain the relationship. One angle shareholders, the board of directors and the top management. Therefore, how do they maintain the relationship? Thereby, how do they achieve their given goals as well as the targets or the objectives in line with the compliance requirements. Understood? Okay. So, as you all know, who are the shareholders? Shareholders are the owners of the business. As I mentioned previously, they are the owners of the business, but they are not involved with the day-to-day running of the businesses. Okay, although they make the investment, they might not be involved with the day-to-day management of business. So, when it's come to the board of directors, who are they? Shareholders, we call them as principal or agent. Shareholders, principal. Then the agents, we call the board of directors. On behalf of us, on behalf of the shareholders, they might have the responsibility to proper governance of the organizations. Okay. Therefore, the board of directors should work in the interest of shareholders. Okay. As the board of directors, they have to think about the best interest of our shareholders, and in the meantime, they should overlook activities carried out by management. Yes, in that case, whom are management in the sense you all know? Who will be appointed this management? By the board. From the board of directors, they are appointing the managers. Maybe as a CFO, CEO, COO like that, top management are appointed by this board of directors. Therefore, board of directors have right to overlook them as well. The managers' activities have to overlook by the board of directors. That is what is highlighting. Should work in the interest of shareholders in one angle, and also in the meantime, they should overlook the activities appointed by themselves. Again, top management activities also they have to overlook. Got the point? Okay, these are the three parties. You all know top management are the individuals who are managing the day-to-day organizational activities. Therefore, in the strategic management, yes, top management is the salaried employees. They are, we called as salaried employees, as you all know. So therefore, in the strategic management perspective, we have to see whether these relationships, with these relationships, how they govern the business organizations. Got the point? Okay. I will be given two practical examples. You all have to give the answers. Huh? Yes, governance structures. These are the different governance structures. This is the US governance structures. As we discussed, there is as like shareholders, they called as stockholders. Then they are the one who are appointing the board of directors. The board of directors are the person who are appointing the executive management or else top management. Okay. On the other way around, they have the responsibility or the accountability to the board of directors, and the board of directors are accountable for the shareholders. So this is the structure about the US governance structure. And also there are different committees. As you all know, in Sri Lankan perspective, we can say audit committee, the remuneration committee. There are different committees. In the US also, they might be having nomination committee, reward committee, finance committee, etc. So that is US governance structure. And also I have mentioned the Japanese, it is also same as that. What about Sri Lankan perspective? Sri Lanka also, as we discussed, there are shareholders. The shareholders will appoint the board of directors on behalf of them. then they have, as the board of directors, they might be responsible to carry out their activities for the best interests of the shareholders. Yes, then like moving to the definition again, like go in depth with the definition. As we discussed, as a company, it is important not to focus solely on the compliance. That means when it's come to the corporate governance, we might be looking to these two aspects. One angle, conformance. We call the compliance as the conformance. Okay, the conformance, that is the compliance. And the other way around, we have to think about the performance. Okay, because most of the books might be mentioned about the corporate governance only as a conformance. That means only as a compliance requirement, but it is not so. In a real world, in an actual scenario, it might not be like that. I think you might be having experience that when it's come to the corporate governance, you all might be thinking on it is only compliance. But it is not so, because in the theoretical perspective, we have to look into the both aspects. One angle is the conformance, on the other angle, we have to think about the performance. The conformance, as we discussed, the conformance in the sense, the necessary rules for the proper conduct of the organization, including the compliance requirement of external regulations and the internal organizational policies. What do you mean by here internal? Yes, external organizational policies or the external regulations. As I mentioned, if it is a bank, they might be abide by with the central bank ruling. I think you might be having experience. Yes, they might be abide by with the central bank ruling. So that is coming under the external regulations. So when it's come to the internal organizational policies, yes, each and every organization, they have the particular internal control system. Okay, how to handle with the cash, what might be the authoritative limits. So likewise, there is internal control system and the policies. Therefore, when it's come to the term conformance, we have to think about how to go in line with this ruling. One angle external regulations and the other way around internal organizational policies. Maybe as an internal control system, you all might be learned under the auditing, no? You all did audit. Yes, then you might be having better idea rather me. Yes, internal organization policies in the sense that part. That means internal controls how we have to be abide by or the compliance with these internal organizational policies. Yes, next part is the performance. As I mentioned, the performance is the companies need to think about their economic success, because we might not be able to run in a short term perspective. That means අපි අදට හෙටට විතරනේ නෙමෙයි business එක run කරන්නේ නේ. We have to go for the long lasting period. Therefore, here the performance in the sense, we have to look around the sustainability of the organization. With the sustainability concepts, now the companies are moving to this CSR requirement, the corporate governance requirements, etc. Therefore, these two aspects we have to overlook when it's come to the term corporate governance. Yeah, anything up to now you want to clarify? Yes? Okay, no? Then what do you mean by here? Then what might be most of you all are working as public and the private organization. Then what might be the role of the accountant in this, the corporate governance scenarios? What would you play as the role of the accountant in this corporate governance? Are they going to more extreme like the conformance or else performance? Because under corporate governance, we have to talk about two aspects, two extremes. One is the conformance and the other one is the performance. So my question is, when it's come to the role of the accountant, so to which extreme they are moved towards? What should be their role? Although they are doing something else, What should be? It has to be happen. No, I just mean like whether they are going with the extreme of the conformance or else the other way around, performance. Performance. Conformance, no? Why do we say conformance? They might be more or less think about how to apply these IFRSs, how to maintain the revenue recognition, how to abide by with these particular IFRSs, IASs, etc. Because they try their best to, yes, for the revenue recognition I have to look around IAS 18. So likewise they might be go more towards these the aspects like the compliance, or else the compliance based work is more in this the role of the accountant. Here that they have mentioned, but it's risky. Risky in the sense, as a one role, as an accountant, we have to look both. If we are going with the corporate governance principles, we have to look both extremes, so the both aspects. Therefore, it is highlighted here. Yeah. The one risk, the second point, the one risk is that accountants spend too much time on conformance and compliance based work and too little on enhancing the business performance. Right? They might be thinking about how to record the revenue. Whether do I need to compliance with this particular IFRS or this particular IASs. So that is going in line with the compliance, no? There is a specific guideline given as IAS 18. Yes, this is the revenue recognition. So likewise, they might be more towards this conformance or the compliance aspects, rather going with the performance stream. Understood? Okay. Yes, then what might be the importance? Yes? The mainly why do we need to think about this? What might be, what do we say like very important in the corporate governance? Yes, because as we know, the principal agent relationship, due to this principal agent relationship, the corporate governance principles might be having the paramount importance on if an organization's perspective. Why do we say, as discussed, the first point it might be mentioning, the good corporate governance aims to ensure that organizations are properly run in the best interest of their stakeholders, including the optimal performance of national and international economies. As we discussed, there are two parties, no? Principal and the agent. Therefore, we are appointing the board of directors. Please overlook our investment as a shareholder. As a shareholder, we might be appointing the board of directors. You all can get the custodian or the ownership of our investment, but you all have to overlook our investment in a proper manner. So therefore, in one perspective, as the organizations, they have to maintain the best interest on behalf of the shareholders, as we call the stakeholders as a whole. What are stakeholders? We discussed last week. Why did I put here the shareholders? Stakeholders? Stakeholders are the parties. Yes, directly or indirectly influence towards the organizational activities or the decisions. Maybe the employees, for an example, one day if they are making a protest, we might not be able to go for the smooth running of the businesses. So they might be have an influencing power towards the organizational decisions. Therefore, stakeholders are the individuals who have direct or indirect influence for the organizational decision making process. Maybe the government. Now, recent budget pronouncements, as an accountant or as a CFO or the CEO, you all have to be abide by with. So that is one stakeholder is the government. So once we are taking the decisions as the managers or the board of directors, we have to be in line with these given things, no? Maybe the budget pronouncements. So likewise, stakeholders are the individuals who have a direct or indirect influence towards the organizational activities. So anyway, here it will be mentioned about under corporate governance, therefore the board of directors have right to make the best interest of these stakeholders. For an example, employees. We have to think about their betterment. Understood? The second point also same. For an example, if the businesses are doing their behavioral styles, that means if the businesses are doing something unethical, it might be affected to our shareholders. If the businesses are going some unethical business practices, then what will happen? It will affect to our shareholders' investments. Got the point? So that is one importance. Therefore, we have to think about the best interest of our shareholders. Rather like get rid of these unethical behaviors or unethical business practices, we have to get the best interest of them. That means we have to think about their interest, rather not merely the organizational interest or else self-interest. Understood? Okay. Thirdly, the reduce undesirable consequences. Similar to that. What do you mean by undesirable consequences? Yes? If there are more undesirable consequences, in the sense the risk is high. As a shareholder, I might be having risk. What will happen to my investment? Got the point? The third point, to reduce undesirable consequences for shareholders. That means when assuming if the company is not doing in a good manner, they have very undesirable consequences or the bad practices, then the risk is high as a shareholder for me. Got the point? Then we might be, as a shareholder, the risk is more. Then what will happen? If the risk is high, as a shareholder, my expected return also should be high, no? I am demanding more. Got the point? If the risk is high, it's obvious, no? You all are not in finance stream, but you all might be having the simple understanding. If the risk is more, in the sense, as a shareholder, I might be demanding higher expected return. Maybe the dividend, maybe the capital gain. Then the company side, the cost of capital is high because they want to pay more to the shareholders. But if the companies are governing in a proper manner, rather having these undesirable consequences or unethical business practices, then there might not be problem of this framework like corporate governance. Understood? So that is why they become a mandatory requirements for the organizations. Got the point? Okay. Then lastly, the good corporate governance can bring benefits to companies. It can also temper growth. That means what? Yes, if the businesses are going very smooth manner, even from the foreign investors, they might be come and invest in our company. Because they know that this company is very good, they might be abide by with all the governance requirements, all the compliance requirements. Then it is easy for us to get the maximum benefits and the growth objectives. Understood? So that is the last point. The good corporate governance can bring the benefits to the companies. It can also temper growth. Because foreign investors, they might be looking that whether this business is running good or the good governance is there. Shall I able to invest in that particular company? So they might be thinking on that perspective. So if the businesses are running in a smooth manner without having any hazardous or the unethical practices, then they tend to invest. Therefore, we can gain the benefits from that kind of good corporate governance principles. Understood? So therefore, to that extent, this is having an importance. Okay. How this concept has emerged? The corporate governance, as I mentioned. Yes? Have you heard about this stewardship theory? How the agency theory behind the agency theory, we talk about this stewardship theory. That means for this particular agency theory, there might be foundation for this agency theory. This stewardship theory become the foundation or the base for this agency theory. Understood what I am telling? The stewardship theory is the foundation to emerge this agency theory. Yes, have you all noticed, like for an example, country like Sri Lanka, we can say the company, have you heard about the Sarbanes-Oxley Act under the auditing? No. Sarbanes-Oxley Act in the sense that is also USA. They might be mentioned about how to the rules, governing rules about for the better interest of the shareholders. Understood? Under the Sarbanes-Oxley Act, you can search from the web also. It's widely available. When it's come to the Sarbanes-Oxley Act, it is one of the acts, okay, governing act. So in that act, they have specified that how to maintain the best interest of the shareholders in USA or the New York listed companies, US listed companies. So it has happened in the I think around Sarbanes-Oxley Act came around 2002. With I can't mistakenly, I don't know exactly, but it may go around 2002. So in that era, we call that as a very rule-based corporate governance principles, because in that in the New York Stock Exchange, they are giving that as a mandatory requirement for all the listed companies. But when it comes to Sri Lanka, we are called that as the corporate governance as not like rule-based, it is going as the principle-based approach. Why do we say principle-based? That means there is a compliance requirement, okay, but if they might not be able to go with this compliance requirement, they have to justify. Therefore, we call in Sri Lankan perspective this corporate governance ruling as principle-based approach. But when it comes to the country like USA, we call that as rule-based approach. The rule-based approach in the sense it is mandatory. But in Sri Lankan perspective, we call that as principle-based. That means if we might not be able to go with this compliance requirement, what we can do is we can justify or we can make an explanation why we can't do so. For example, we can say in Sri Lankan perspective, under the Securities and Exchange Commission Code, it has highlighted that the chairman and the CEO has to be separate roles. Got the point? The chairman and the CEO has to be, roles should be separated. Chairman should be one person, then CEO should be another person. But if we can't do so in one particular company, what we can do in Sri Lankan perspective, we can rationalize or we can make our explanation why it might not be. That is what we call, this is a principle based. We can compliance, or else what we can do, we can make our explanations. That is principle based approach. But in USA, it might be called as rule-based approach. It is mandatory. Yes, that is different story. Come back to again the stewardship theory. Yes, when it's come to the stewardship theory, as I mentioned, this might be paves the foundation for the agency theory. You all know agency theory now, no? Is it? Yes. Therefore, this might be the foundation for this agency theory. What do you mean by this stewardship theory? Yes? You all know how the origination of auditing? You might learn, no? Experts. Yes? How origination of audit? Yes? In the past, you all know most of the lands are owned by whom? There are landlords. Yes, there are most of the lands are owned by in the past by whom? The landlords. What the landlords have done? They entrusted their ownership to whom? Tenants. So what they did, like they entrusted all the custodian about their ownership of the lands to tenants. But after that they are expecting return out of it. For example, pluck the coconut from the particular land, they might be expected return out of them, no? The income generation has to be given to the owner or the landlord. So it is something like that. Therefore, in that situation, what has happened? And also not only that, the most of the lands have been owned by the temples also. What these chief monks have done, what they are doing, like all the, like there might be what we call Dayaka Sabha. You all know, no? Dayaka Sabha. Then we are appointing like Pradhana Dayaka, then giving all the entrusted power to, you can manage all the lands. Because usually monks might not be getting the ownership or the responsibilities towards that. What they did was, they just give as a chief monk or the monks, they might be passing the whole authority or the custodian of the lands to this Dayaka Sabha. Then what they did? Yes? Thereafter, how do they generate these income and expenditure accounts? They might be asking how the revenue generation, how might be the expenses they have incurred. So likewise, they might be think on that, how to maintain this, the proper wealth or else the proper performance of these particular lands. So it's something like, this is the place where that means how these particular Pradhana Dayakaya එයා වැඩ කරන විදිහ අපි බලනවා තව කෙනෙක් ලව්වනේ. බලනවා මෙයා හරියට වැඩ කරනවද නැද්ද? Like it's something like audit. No? Have you all learned, like as an organization, all the managers have the responsibility towards the preparation of the financial statement, and we are appointing external party to come to the organization and have a look about these financial statements. So that is what we call the origination of the auditing. So it is something like that. The stewardship theory also coming behind this. That's why I want to highlight that. I hope you might be aware that the origination of auditing. Anyway, stewardship theory is highlighting what? Stewardship theory sees appointed directors as stewards who carefully look after the resources they have been trusted with. So in my case also, the previous story, because as a chief monk, he might be thinking that the Pradhana Dayaka will take care of all these particular lands on behalf of myself. Because I am not involved with those activities, but on behalf of myself, he or she might look after all the activities of the land. So same thing here, we are appointing directors as stewards. So we are giving the responsibility or the ownership or the custodian to them. Then we might be thinking that they might be work towards for our betterment, our best interest. That is what we call this, the base of the stewardship theory. So in that era, the stewardship theory is validated around 1991. We call them like, these stewards, you are not stewards in the sense the person who are managing or the directors. The directors and managers as agents who act in their own self-interest. Therefore, these stewards are expected to naturally act favorably on behalf of the owners. What does it mean? We think that these particular stewards or these particular appointers, they might be working towards the best interest of ours in naturally. We might not be assigning you do this, do that, but they have the natural habitat. Yes, we are work for the betterment of them. That is what the origination of auditing also Pradhana Dayaka might be think about, not to steal anything about from the temples. They might be think about the betterment of the temple activities and might be going with line with the betterment of that. So it's something like that. Then what we call in the stewardship theory also we are assuming these stewards or else the persons who are appointed on behalf of us, they might be naturally work the best interest of ours or the shareholders. Understood? That is what we call this stewardship theory. But what will happen when the time passed, this assumption might be having criticisms. Regarding this theory might have so many criticisms. What kind of things? The one criticism is that the good stewards will in fact initially exist, and further that these stewards will maintain their qualities over extended period of time. That means there is a criticism that are these stewards are good stewards for over the period of time. It might not happen, no? Even in organization. So as a CEO, if one person is working for 20 to 30 years of operations, he might know everything, even to do the manipulations of the internal control system even. So therefore, we might not be expecting something like that. Therefore, that is the one criticism against this stewardship theory. Although they are telling that these stewards are working betterment or the naturally work betterment of the others or the owners, it might not be going as a long lasting. After a certain period of time, they tend to do something stealing or fraudulent activities, no? So it's something like that. Therefore, stewardship theory might be become invalid thereafter this agency theory coming to play. But the base is this stewardship theory for the agency theory. Understood what I am telling? The base gained from this stewardship theory or the foundation. What might be the difference between this agency theory and the stewardship theory? You all know agency theory. What might be the main difference? That is the main criticism. Because here they are mentioning that while agents are expected to act on behalf of the principal, agency theory differs from stewardship theory because it suggests that the agent may not naturally act for the best interest of the principal. Did you get the point? Although in the stewardship theory we might have an assumption that these shareholders or these owners might be work betterment of us. That means shareholders. It might be naturally happen, but it might not be happen in actually it might not be in the realistic perspective. But in the agency theory we are highlighting these agents may not naturally act for the best interest of the principal. Otherwise there might not be FCID and CIDs, no? Yes, that is what this forensic accounting, those things came around. Because we might not be accepting the fact that in realistic manner they might be doing betterment of these shareholders. That is what they are doing, like fraudulent financial statement, misappropriation of assets. So they have done something wrong. So in that situation we might not be able to, accordingly we might not be able to thinking this stewardship theory is still for all valid. There is an invalidity. They are based stewardship theory, but now the agency theory is applicable in today's arena. Because agency theory is different from the stewardship theory, we think that the agents may not naturally act for the best interest of the principal. Agents might do some violations, or the fraudulent financial statement, or the misappropriation of assets, or bribery and corruptions, everything. No? You all can see everyday news, there might be something, no? Some person might be going around with this FCID or CIDs. So therefore we might not be think about that. Therefore to invalidity is the agency theory is must, rather the stewardship theory. But stewardship theory is the base for this agency theory. Yes, with this agency theory, behind this agency theory there are two assumptions. Okay, you all have to remember these two assumptions is much more important. The two key assumptions underlying with the agency theory. What is it? Yes, all individuals will act in their own self-interest. That means what? Yes? What does it mean? Yes, we are appointing the board of directors. Although we invest as shareholders, we are appointing the board of directors. Yes, you all are the principal. You all have to govern the business in a smooth manner. Then in that situation what will happen? All the individuals will act around the self-interest. Yes? Normally people might be think about rather the organizational interest, they might be think about their self-interest. Do I need to work overtime? Today's work is finished, I am going. They might be think about their self-interest rather the organizational interest. Therefore, in this situation, under the agency theory, also thinking that all individuals will act in their own self-interest. Therefore, where a potential conflict of interest exists between the principal and agents. Agents will tend to first in ways that will maximize their own personal circumstances. That means they might be thinking their personal interest or the self-interest rather thinking about this organizational interest. And also one more thing, agents are in a position of power. What do you mean by that? Yes? Who are the agents in the principal-agent relationship, but whom called as agents? Yes? Whom? Board of directors, no? They are the one who acted on behalf of us as shareholders. Shareholders are the principal. So in that situation, what do you mean by agents are in a position of power? What kind of things? Because they are the one who deal with the companies. Board of directors are the individuals, because as I mentioned, shareholders are not coming to play in the day-to-day running of the businesses. Therefore, everything is handled by this board of directors. Therefore, they might be having this position of power because they have the access to all the information in an organization, even for the internal control system, even for some other like processes. So, everything based on their power position or the position of power, authority, responsibility. That's why I told you sometimes they might be go with this, with the power they might be go for the manipulation of records of the financial statements. We can't say like as human beings, they might be prone to do like that. That is what forensic accounting came into play. Have you all heard about forensic accounting, no? Yes? What do you mean by that? Huh? Forensic, what might be the difference between the forensic accounting and the auditing? You all know the auditing, no? Hmm? Yes? Because in today's context, you should have that kind of general understanding. All are talking about the FCID and CIDs. Yes? If layman is asking from you all, as a person who is reading for the masters. Hmm? Yes, in the auditing what we are doing? Yes? We just overlook the information given by some other party. The evidence gathering, no? But when it comes to forensic accounting, we are going in depth or in detail analysis about the evidences. Okay, in the forensic accounting, if they have done something misconduct, as I mentioned, fraudulent financial statements, or else misappropriation of assets, or the corruption. So in that situation, what the FCID are doing? Usually they call the respective victim or the perpetrator or the fraudster and ask him to stay, and media also waiting for them. The whole day they might be interviewing and asking what has happened, how this fraud has occurred. Okay, therefore in the forensic accounting what we are doing, it might be go in-depth analysis, not like the role of auditor. Okay, because the role of the auditor is restricted to the financial statement. But when it's come to the forensic accounting, he or she might has to play a big role because he might be going on the in-depth analysis about the evidence gathering, how this fraud has occurred. Okay, that is something behind, not in respect of this. Yes, because what I want to highlight, that with the position of power, people can tend to do the like frauds. There might be potential or the chances because they can manipulate the internal control system or the cash handling. Understood? So that is what we call the position of power. Here it has been mentioned, agents are in a position of power as they have better access to control of information and the ability to make decision. This allows them to further their own interest. That means most of the time the individuals or the agents might act on their self-interest as well as they have the power. They have the position of power, that means easy accessibility to the information of the organization. Then in that situation they can go with this like misconducts. So that is where we call this the conflict of interest. we call the agency cost. Have you all heard? We will learn about that. The agency as a cost. Why it become cost we can learn later. But just to have an idea, with these two assumptions of the agency theory, the one angle, what? Agents will act on their own self-interest rather the what? The organizational interest. They might be thinking about their personal interest, and also they have good like more power, better access to all the information, internal control system, so everything. So due to these two assumptions which is underlying under the agency theory, there might be problem of the conflict of interest. Why the conflict of interest? Yes, shareholders might be thinking no, they are working for the betterment of ours. But on the other way around, the agents are working for their own self-interest and they have the more power. Therefore, there is a situation like conflict of interest. Did you get the point? That is what we call the conflict of interest under the corporate governance. Yes, and one more thing. With this conflict of interest, have you heard about the term goal congruence? What do you mean by goal congruence? Yes, the goal congruence in the sense, irrespective of the level of the organization, we have to go for common goal, common objective, common vision, mission. For an example, marketing manager might be telling, no, we can't approve the budget for this particular promotion activity. We might not be having adequate finance at this period. So, like conflict of interest might be coming, no? That is due to the fact that they might be having not the goal congruence, but we know that if we have invested in that particular promotional activity, we can go for the good revenue. We can generate proper revenue, good revenue. But in a situation like that, the goal congruence in the sense, all have to be go for the common goal or the common objectives, irrespective of the level of the organization, whether we are at the corporate level, operational level or else middle level. Even the clerk might need to think about that. Yes, we have to go with that particular goal. There should be a common objective or the common goal. That is what we call the goal congruence. But with these conflict of interest situations, we might not be able to go with this, the concept called the goal congruence, because they might be think about their own interest. Understood what I am telling? As agents, they might be think on their own interest rather the organizational interest. They might not think about that, whether we have to think on the betterment of the organization. Because due to this agency problem or the agency, what we call the as agency cost, they might be work towards their self-interest, as also they might be having this position of power. They would underline with these two assumptions, we can say that there is a conflict of interest in between these two parties, what we call the principals and agents. Got the point? There is a conflict of interest. Therefore, how do you align the interest of the principals and agents, thereby modifying ill-informed behavior of the agents in order to minimize this agency cost? We call this as a agency cost. Why does it become a cost? Yes? Why do you say that as a cost? Because there are conflict of interest. Got the point? There is a conflict of interest, principals and agents. Although the principals might be thinking they might be acted betterment of ours, but it might not be happen in actual scenario. Therefore, with this conflict of interest, we can call that as the agency cost. Yes, this is very important. Since based on this, I will give two practice examples. Okay. What do you mean by this agency? Like three types of agency cost. Did you understand what is agency cost now? Due to this conflict of interest, agency cost will emerge. Yes, there are three types of agency cost. We will later look into that. The one thing is monitoring, bonding, and we call the residual loss. Why these costs might be arise? Which kind of factors might be back behind this? As we mentioned, one thing is this conflict of interest. And also, due to this conflict of interest, there is a information asymmetry. Here what we call the information asymmetry. What do you mean by information asymmetry? Yes? When it's come to the country like Sri Lanka, do we have any information asymmetry? Yes or no? Asian countries, information asymmetry is high or low? Information asymmetry in the sense information are not going in an equal manner to each party. Did you understand? The information asymmetry in the sense information might not be distributed to all in an equal manner. Yes, when it comes to the Asian countries, that is the question which I raised. The information asymmetry is high or low? Developing economies? As a developing economies, information asymmetry is high or low when it's comparing with the Europe countries? What you can say? Information asymmetry? That means information might not be going in an equal manner. There is a discrepancies. I might be having more information, but you might be having less information. Not in an equal manner. Yes, Asian countries, information asymmetries, high or low? High. We can't say low. Why? In the sense, we might be having problematic, even to determine the share price, it might be happen like political instability is there. It might be have a factor or the determining factor to determine the share price even. Therefore, to that extent, information asymmetry is there. Information is not readily available, but when it comes to Europe countries, the information asymmetry is less. They do have information. Did you get the point? Therefore, Asian countries, information asymmetry we can say rather high when it's comparing with the Europe countries. So, in like principal agent relationship thing also same. Where the agent has more information than the principal. As we discussed the position of power in the previous slide, one assumption. Therefore, agent has more information and the more power rather the principal. Therefore, due to one factor is the information asymmetry and the poor communication, poor understanding, and also what the illegal self-interest behavior by agents. What we discussed what frauds? Illegal self-interested behavior by agents. They might be work towards their self-interest rather thinking about the organizational interest. Stealing half sheet might not be thinking, it might not be just a matter, no? Why? It might not be coming under the misappropriation of assets, but it is also coming under even a minor thing if you are stealing, it might be also coming under this misappropriation of assets. It's also coming under these fraud schemes. Therefore, illegal self-interest behaviors by agents also coming one factor due to this cost emergence, cost arising. So, these factors will lead to emerging of these different costs. Got the point? Okay. But before break, I will have to do more. Then I will cover up little bit of thing. Because practice 2 examples are giving. After that, I will give the break. Yes, what do you mean by this? Monitoring cost. Yes? Monitoring cost. There are 3 costs as I mentioned. One thing is the monitoring cost. The other one is, yes, monitoring, bonding cost and the residual loss. Yes, monitoring cost. Shall we see the explanation? The monitoring costs are incurred by principal because an agency relationship exists. Some monitoring costs are compulsory or the mandatory, such as costs relating to annual reporting and external auditing. What do you mean by monitoring? Yes? If all are working for the betterment or the best interest of all, no matter. They might not be having this kind of monitoring mechanisms. or the evaluation process, controlling process. But due to the fact that, as we discussed, under the agency there might be conflict of interest. Therefore, there should be something like the mandated requirement, like even in Sri Lankan perspective, the PSCs, they have to have external auditing. It is a mandated requirement, or preparation of the annual report, because as a monitoring mechanism, then they can think about that whether these particular companies abide by with the compliance with the given rulings. Understood? Therefore, that is what we call this monitoring cost. It has to be incurred by the principal due to these agency relationships. Some are mandatory monitoring costs, some are we can identify it as the discretionary. Then what do you mean by this bonding cost? Yes, bonding cost. The bonding costs are costs which incurred by the agent to demonstrate to the principal that they are goal congruent, which we discussed previous. The goal congruent, what goal congruent in this is, irrespective of the level of management, they have to go with the common goal or the common objective. If we have this conflict of interest, we might not be able to go with this goal congruence. Okay, it is highlighting in the bonding cost. The bonding costs are incurred by the agent to demonstrate to the principal that they are goal congruent. That means, as an employee, I might be working betterment of the company. Understand what I am telling? For example, if I am giving a one particular project to evaluate, I will do it accordingly, rather any interfering by the management. So, because I am accountable for that, I am bonding to that. Got the point? That is what we call the bonding cost. This may include voluntary restrictions on the agent's behavior or benefits to demonstrate goal congruence. What kind of cost we can say? Yes? For an example, in a company's perspective, we are doing the performance appraisal system, because we want to make sure that all the employees are having good performance. So, it is a cost towards the organization, no? As you all know, it is a huge cost involvement. We have to make the panels or interviewing, and we have to make prepare the sheets, performance evaluation sheets, and call for meetings. So, it is a cost towards the company's perspective. But we have to do that because we know that all people or all individuals might not be work betterment of the company. They might not be going with this, the goal congruence aspect. Did you get the point? That is what we call this, the bonding cost. That means agent need to show that they are working on behalf of the principal's interest. We have to call for the meetings, we have to asking about their measurement of the performance, whether they are at the good, whether they are at the bad situation. If they are at the poor level, we have to give them the training. So, all the things are included as a cost. That is what we called as bonding cost. Then the last one is the residual loss. The residual loss is a cost incurred by the principal. Is what kind of things? The residual loss arises because no matter how well monitoring and bonding efforts occur, that means to what extent the previous two have been go in smooth manner, the agent will inevitably make decisions that are not consistent with the principal's interest. That means what? Yes, any loss or cost or underperformance arising from the decisions or actions by the agent represent a residual loss of value to the principal. What kind of things, what kind of examples we can say? As I mentioned, as a board of directors or the managers, they might be having this information power. Sometimes if they want to think about, yes, I just want to overestimate the revenue in this year, they can do so because they want to earn a commission, they might be go for that. Why? Thinking that then I want to get the commission, then I will be overestimate the revenue and gain the commission. Then what will happen? From the company's perspective, it is a cost. Understood what I am telling? In the company's perspective, even though they get the commission as a personal interest or the self-interest, but it might not be go for the betterment of the organizational interest. So that is what we call, like in the, as I mentioned, Orel's case also same. What she did was like ghost suppliers they have created. With these ghost suppliers, they might be what? Yeah, overstate, like they might be like take money from them ghost suppliers or the bogus suppliers. So that is, then what will happen? That might be go for the bankruptcy situation. Shareholders might be losing from these situations or the circumstances. So that is what we call this residual loss. These are the three costs that we have to talk about under this agency cost. I hope you got the points. First one is the monitoring cost. The monitoring cost example, we have to do annual reporting or external auditing in order to monitor their process. And the bonding cost in the sense is because as we discussed, they might not be having the organizational interest. They might be work towards their self-interest. They might not be go with the goal congruence or might not be at the same platform. So in that situation also we have to call the meetings and evaluate their performance. If they are at the poor level, we have to give them training, etc. That is also cost towards the company. Then the residual loss in the sense what we discussed, yes, if agents done something wrong or the misconduct, it is also cost to the company, maybe the fraud. Got the point? It is a loss towards the company. Yes, now shall we move with this example given, practice example 1. I'll give you some time, then you all have to come up with an answer. Yes, online students also can come up with an answer for the questions given. Yes. Don't take much time. What are the agency costs given? Yes. Shall we read once? Have you all read? Okay. Do you identify the cost? No. Shall we read once? Thereafter, I'll give 5 minutes time. Huh? Tara was the CEO of the large listed company. He had been in the position for many years. Okay. During his tenure, a branch had opened near a popular seaside resort in Thailand. It was not profitable, but Tara argued it was important and visited it several times each year. So, what kind of cost might be involving? He would commonly take a holiday at the same time at a nearby resort. The companies would pay his hotel bills and travel costs on behalf of the Tara. Then Tara later retired and his position was advertised. Then Susan's role. Yes, before that we have to understand what is the role of the Tara. Yes. What we can say about this Tara's expenditure? Any idea? If you have get the theory, you all have to come up with the answer, no? What you can say? Tara's expenditure incurred by the particular company. Yes, it's like which cost? Any idea you? Yes. Come up with an answer, then only I can assess your level. Did you get anything out of the lesson or nothing? Yes, what we can say? Yes, although the company has incurred many amounts towards the Tara, this Tara's expenditure, did she give something return to the company? Did Tara give something return? No, she has expended all this money to her betterment. She went there once a year, spending and holiday as well. They are mentioning holiday at the same time nearby resort. So this cost is but incurred by the company, no? Then it might be identified as it is good practice. No, it's mismanagement. We can say that as residual loss. It is loss towards the company. Understood what I am telling? Did you get the point? Due to this mismanagement or the mispractice, it is a loss towards the company because company gained nothing as return. Got the point? Okay. Then what about the role of the Susan? Yes. Then the Susan's role? What Susan performing? Now I think Tara retired. Then the position has advertised as CEO. Then Susan came the role. Then Susan was interviewed by the board for the position. Susan had sought extensive information about the company. That means before going for the interview or after that, he might be searching more information about the particular company. Then he got to know that Tara's regular travel and holiday expenditure. At the interview, without inappropriately referring to Tara, Susan advised the board as a candidate or as a interviewer. So Susan advised to the board he would only travel with permission from the corporation chair. That means he might be mentioning that if I want to go for the branch in Thailand, I am going with the permission from the chairman. Okay, from the board. Second point, if urgent travel was required without permission from the chair, he would provide a written report to the board following the travel. That means what? In an emergency situation, he has to go there. He will definitely provide a written report to the board after his travel. Thirdly, if the report was not accepted immediately, he would pay these travel costs personally without further request to the company. Got the point? Lastly, he would undertake a review of the efficiency of all overseas branches with a view to closing those that were not profitable. What does it mean? That means he is telling that yes, I will take the responsibility to overlook the overseas branch, which if the branch is not profitable, then what will I do is I will make them shut down. Understood? If they are not profitable, I will make them shut down. Then what might be the theory behind that? What kind of cost it might be involved with that? Now you all know Tara's situation, it is a residual loss to the company. Then what about the Susan's situation? What you can say? Yes, the Tara's expenditure, this answer, Tara's expenditure is an example of residual loss. When it comes to the Susan's situation, Susan's behavior, voluntary restriction accepted by Susan in order to show that he is bonded to the company. Why? The restriction on freedoms are bonding cost borne by agents. Why do we say it as a bonding cost? Yes, that means when it's who's a Susan, no? That particular person is telling, I will accountable for this particular work. If I am going there, I will be, if it is urgent situation, I will give a written report. Did you get the point? That is what he is well accountable or well bonded to the organizational activities, responsible. Did you get the point? So that is what it has been identified as a bonding cost. His willingness to undertake. And also in this example, we observe that Susan will also bear a dollar cost if the board does not approve the travel. Because in third point, it has been mentioned that if the report was not accepted immediately, he will bear all these costs from his personal hand. He must be borne by personal. That means to that extent, Susan, the person called Susan might be having the bonding cost towards the organization, accountable to the organizational activities. And also the last point highlighting his willingness to undertake the overseas branch review is possibly another bonding cost. That means he is telling that voluntarily I will accept, I will oversee the branches. If there are branches like unprofitable, we will shut down those operations. Understood? So everything is done by as a bonding cost or else accountable manner towards the organization. That is what we called as bonding cost. And also they might be mentioning about the monitoring cost also. Does it having any monitoring activity in this situation? Yes? Yes, Susan. Yes, Susan taking actions regarding the past activities and giving some extra duties to the chairman or the board. Did you remember the one point? Yes, asking from the board. Yes. Yes, is all these things are Susan advised to the board. Sometimes previously board might not be thinking about that we have to go with these monitoring activities. Did you notice that? Previously, before the Susan explained about this, because Susan has studied and came to the interview about all the past history about the Tara situation. So in that situation, once Susan came and advised to the board, if you are going with these aspects, we can go for the perform well. So that is the last point. Also note that Susan has suggested extra duties to the chair or the board of directors. If performed, these extra duties are becoming as monitoring cost, the cost which is borne by the principal. Because they have to overlook now, like annual reporting or the external auditing. Now they have another burden. Got the point? They have another burden to monitor these activities. So we can identify that as a monitoring cost or monitoring activity. Did you understand? Yes or no? I'll be. Do I need to explain it again? No. Can you get the point? No? Okay. Shall we see the second example then? What about your knowledge gain for the answer from practice example 1? Then I'll give the break. This is a previous, I think, past paper question. Practice example 2. Yes, have you read once? I think it is simple rather the previous one, no? Everything is given directly. ABC Company Limited is a large company with many shareholders. Mr. Pereira, the CEO, was appointed by the board of ABC Company as a CEO. So, following are the things. First one is ABC Company reports to the public as required by law with audited annual reports. It's obvious, no? Which cost? Yes, it's a, we can say, monitoring cost. So, in the second point, the board has a policy that shareholders' views and demands of the company should be assessed every 2 years, even though this is an expensive procedure. The board has a policy, we have to get the feedback from the shareholders, what they demand, what their requirements are. So, in that situation, what it is? Because what they are doing in the sense, we have to get them what they are required from the company's perspective, what they are demanding. So, it is also another cost towards the company because it might be incur a expensive procedure cost. But although we can say that as a, because we have to reduce the gaps in between these principals and agents. That is why they are asking to call the meetings or else, yeah. The board has a policy that shareholders will, yeah, it's like calling meetings every 2 years time. So, it is also coming as the monitoring cost, and also it might be going as extra work towards the company, but it is also highlighting as a bonding cost. That means extra work of a cost to the board, the extra work of the board can be seen as the bonding cost. In one angle it is a monitoring cost, but on the other way around, for the board it might be take time, they have to call for the meetings and all, it is an extra burden. So, it can be also identified as, but that is to accountable with the two parties, okay, because then we can gain their demands, we can understand their demands or the requirements. So, that is what also called as the bonding cost. And also the Pereira has occupied his position for many years and no longer considers it necessary to work towards new product as ABC company already has many successful products. It is obvious, no? Although Mr. Pereira has worked for several years for the organization, he might not be thinking about it, come up with new thing, at least a new product. only existing products are running. He might be thinking existing products might be quite enough to be successful. They are very successful products, but nothing coming as a new. Therefore, although this laziness of this particular person might be indication for the residual loss to the company, because keeping that kind of person in a position for many years is a loss to the company. Nothing that means nothing coming new. Every day we are running in the same thing, existing products. Understood? It's a loss towards the company. Then when new senior managers are appointed, the board expects those new managers to demonstrate their loyalty to ABC company and pays more to those who are very loyal. Like loyalty programs that we are adopting in organizations. Like those who are being very loyal to the organization, they might be getting an extra benefit or extra payment. In that case, what we can say, it is another bonding cost towards the company, another extra burden or the extra expenditure. Because we are accountable, as we promise, we have to pay. If they are being very loyal to the company, we have to pay them some charge or additional salary or additional benefit. So again, it might be come up as the bonding cost. Those are the things coming under. I hope you got the points. Understood, no? So in the examination point of view, please be ready for not on one of the practice examples given. Similar examples you all can expect it for the exam's purpose. Okay, now I will give short break. After that, we will continue with the balance part. Okay. we start? Because we have to cover up more things under this corporate governance. Anyway, you all can look into because there is a corporate governance code I have uploaded. Up to now, we discuss about agency theory. Okay, but at the very beginning, we have discussed about the corporate governance. Then, why this corporate governance concept have emerged? Okay, emerged due to the fact that mainly the principal agent relationship. Then we discuss about what the principal agent relationship or the agency theory has emerged based on the stewardship theory. But in the stewardship theory, there are some criticisms against that particular theory. Then as a result of that, agency theory has emerged. And also under the agency theory, we talk about mainly the two assumptions behind that. One thing is, yes, what are they? Self-interest, and the other one is the position of power. So due to these facts, it is very difficult for us to have we have some kind of a conflict of interest in between those two parties. That is what the principal agent relationship is going on. With those concepts, this corporate governance become important to the each and every country, respective of the level of development, whether it is developed and the developing economies, it might be having great role to play. Those are the things that we have discussed up to now. From this point onwards, what we have to discuss, in the sense, we have to discuss about the corporate governance code, which I have uploaded to you all, but with the time permits, only 1 hour more, therefore I might not be able to take up all. Okay, what you all can do is, you all can refer into this code. Okay, you might not be able to, how many pages? 80, no? Yeah. You might not be able to go for in-depth all, but I will tell you what might be the important areas that you have to overlook. Okay, with my slides, I will tell you all which areas you all have to overlook under the code. Yes, as you all can see, when it's come to the components of the corporate governance, there might be, these are the key components of the corporate governance. Because from this point onwards, we are talking based on the corporate governance code. Did you notice that? Okay. So under these mainly component, there are different components: the directors, the shareholders, and the auditors, the regulators, stakeholders, etc. So those things are talked about or explained under this code. As I mentioned, this has been collaborative work based on the Securities and Exchange Commission as well as the Institute of Chartered Accountants of Sri Lanka, and it has issued in year 2013. In here, you all can see. Yeah, the content is given under the page number 9. So it is something going in the order that we are discussing. About the company, under the company they might be talk about the directors, okay, and their remuneration, how the board should be comprised with, the board balance, the role of the chairman, the role of the CEO, how the board should comprise with, the board balance, the re-election procedures, then their remuneration procedures, how they are maintained with the relationship with the shareholders, accountability, audit, shareholders, etc. Okay, this is the order. That means they are highlighting one by one about these components of the corporate governance. So that is a point which I have included in the slide as well. Okay, did you get the point? Then you can cross-reference from this. This is the order that they are talk about. Yes, I will discuss main things coming under this corporate governance code. Yes, companies you all know, that is regarding the company side. Then what about the board of directors? As we discussed, what might be their role? The board of directors. Yes, we discuss about under the strategic management perspective, we might be thinking about this interrelationship. With whom? Sorry, I didn't get you. You all cannot see in the online people, they can't see?
Miss Penna.
Desktop sharing?
Miss.
No.
Miss.
No, I have shared with the desktop now. They are mentioning like that, can't see? So you all can't see, is it? What might be the problem? The others? They might not be able to see. Whole lecture, is it?
Miss, that